You're listening to Indications by the Conference Board.
Welcome to the Conference Board's Indications podcast. Indications is a public podcast featuring our global roster of thought leaders. Topics range from economic growth and competitiveness to human capital, governance, sustainability, and beyond. Each episode is a serious conversation grounded in data and insights that will keep you ahead of the curve in a turbulent world. I'm Dana Peterson, and I'm here with my colleague, Ataman Ozyildirim, Senior Director within the Economy, Strategy, and Finance Center at the Conference Board. Welcome, Ataman. It's always great to speak with you.
Likewise, great to be here, Dana.
Thank you. So let's discuss the 2022 CSuite Outlook. So, Ataman, the CSuite Outlook is hot off the presses. Tell us what it is and why our listeners should pay attention to it.
Yeah, the CSuite Outlook is renamed from our CSuite Challenge survey that we've been doing for 23 years now. This survey reflects the perspectives of more than 900 CEOs and nearly 700 other C-suite executives. And the respondents come from North America, Latin America, Asia, and Europe, covering the major economies around the world. And we asked the participants to respond about what they see as their top business threats in 2022 and what their plans are for growth, what strategies they will use, where do they see the risks and opportunities. So it's a really good way to keep the pulse of what business leaders are thinking for the year ahead and beyond.
Thanks, Ataman.
Dana, you saw the results in the report. What did you find the most interesting from this report?
Well, I think that what really struck me was 6 of the top 10 external concerns among members of the C-suite are linked to macroeconomic factors. So the number one thing was inflation. That ranked the highest among these economic factors. And actually, inflation was number 2 out of all concerns. The number one concern was the COVID-19 pandemic and disruptions related to that, which isn't surprising. But again, among the top 10, economics really shone through, and that was really a concern. So things like inflation, labor shortages, supply chain disruptions, recession risks, shifting consumer buying behaviors, which has a lot to do with consumption and confidence, and also global trade disruptions. Even though there was some variation in opinion by region, there really was an overarching theme here where economics, and especially inflation, was a big deal. So, Ataman, on that note, what did you think was the most surprising?
Yeah, for me, all those economic themes as economists is not terribly surprising. We live and breathe this stuff. But the most interesting thing for me was how organizations are really becoming much more hybrid in terms of where we conduct our work and how we work. In the future, we're really looking at hybrid workplaces and workforces, and that has a lot of implications for economics, of course, on all of those things that, Dana, you mentioned in terms of labor markets and supply chains, and it's going to be really interacting with those new forces that are bringing us the hybrid organizations, especially for the CEOs in the U.S. They expect remote heavy workforces well beyond the pandemic. So 53% of US CEOs expect that to be the case. So this is going to be a long-lasting legacy of the pandemic. But it's not just the US CEOs. This was really a global feature that came out of this survey.
That's really fascinating.
So, Dana, let's delve a little bit more into the economic themes that were so important in this survey. Were you surprised that inflation was one of the top economic concerns?
Actually, no, I wasn't. If we look at inflation, it seems to be everywhere, from food to energy to services, for businesses in terms of producer prices and commodities and consumers. And it just seems like prices are rising just about everywhere. And so it seemed like a natural evolution, if you will, that inflation really rose to the top among biggest concerns for members of the C-suite. Indeed, inflation ranked really low last year when we did the survey. No one was thinking about it. And in just a year's time, it's the number one economic concern. And certainly when we think about inflation, um, across regions, there are different reasons for why we're seeing concerns about inflation, but the concerns are there nonetheless. Just thinking about the US, for example, we're seeing prices for just about everything rising, but certainly wages are rising for many businesses, certainly as we are amid this labor shortage. And this labor shortage is driven by a number of factors, including the fact that there's still some people who are concerned about getting infected, especially if they work with the public. But also, many people have retired and may not be coming back to the workforce. Still, a lot of families with children are challenged with childcare. Tons of issues. But all in all, we are seeing this great resignation happen in the US, and that's driving up wages as businesses are trying to attract and retain workers. But we're also seeing supply chain disruptions in Europe, especially around computer chips, driving, and also especially with respect to energy prices, gasoline in particular, driving up prices in Europe. And in China, a lot of it's factory gate prices. So essentially, the prices that producers are facing as they are seeking out raw materials. So, all in all, inflation is a huge deal. And the C suite, especially CEOs, are squarely focused on it in this survey. So, the other thing that was really fascinating, Ottoman, is that, and I would say also fascinating but unsurprising, is the fact that supply chains and trade disruptions were huge concerns among members of the C-suite. So tell us more about that.
Yes, Dana. Supply chain disruptions is really something that's been in the news, and it's really top of mind for these business leaders. You were talking about inflation, and one of the factors that's driving up inflation are the supply chain bottlenecks that have developed as a result of consumers' response to the pandemic environment. There's been this shift towards spending more on goods rather than services or in-person services, things like travel and entertainment. So all that online shopping meant that demand for manufactured goods increased so much and created these bottlenecks. But on top of that is the fact that there were disruptions in factories, in manufacturing. So businesses couldn't meet that demand. So this disconnect between supply and demand fed into these disruptions and bottlenecks. And it's also one of the underlying factors in the inflation that we're seeing. And this will remain a major worry for CEOs, both in the US and globally. So in the US, supply chain disruptions ranked as the third biggest external concern for CEOs, the external concerns where they don't have any control. And CEOs globally see that as their fourth external concern as a problem area. So they expect supply chain disruptions to continue for the year ahead at least, and this will be an important factor in their considerations. However, an interesting finding in the survey was that they also find themselves or their organizations unprepared for all of these supply chain disruptions. In the US, only 27% say that their organizations are well prepared to deal with crisis coming from these global supply chains. Globally, the number is very similar, about 29%. So that level of preparedness is concerning, but I think it's also a reflection of the fact that they see this as an external concern in the global marketplace, not something that they can directly impact themselves, as their business organizations. When in other work that we've done, when we've looked into whether they are thinking about changing their supply chains, they generally tend to say no. The supply chains are really fine-tuned and optimized, and they don't have plans to make major changes in their supply chain design in response to the pandemic. So it is an external factor that's acting on their organizations, and I think they will be thinking about that for quite a bit in the year ahead.
Thank you, Ottoman, for the great conversation so far. We are going to take a quick pause and we will be right back to pick up the conversation.
We hope you are enjoying this episode of Indications, our podcast channel that highlights need-to-know information for economy, strategy, and finance professionals. In this episode, we are providing insights from our newly released CSuite Outlook report. As you've just heard, this annual report examines how CEOs are looking at the tsunami of changes coming their way and how they plan to respond. In keeping with our mission at the Conference Board, we provide trusted insights for what's ahead for you and your business. Whether you are a CEO or a member of the C-suite, you will find actionable ideas to help your organization better navigate 2022. You can read this report and others like it, listen to podcasts, register for future webcasts, and find interactive charts all on our website at www.conference-board.org.
Welcome back to the Conference Board's Indications podcast. Today, Dana Peterson, our chief economist, and I are talking about our CSuite Outlook 2022 survey and report. Dana, in this report, we found that labor shortages were a major problem overall for C-suite executives. Were there regional differences in how they look at labor shortages?
Yes, there were indeed. Overall, when we look at CEOs and the C-suite globally, labor shortages ranked pretty high, but it was especially acute in the US and Japan. So what's going on in the US? I already mentioned that we're having these pretty severe labor shortages, and a lot of it's a function of the pandemic, where again, you have people who have retired early, folks who are worried about infection. Also, we have the Great Resignation going on. But we think that labor shortages are going to continue to be a problem in the US simply because we have an aging demographic. Many people, again, have retired and not returning. And over the next 10 years, we're going to have more and more people who are going to be shifting out of the labor force. And so that means that we're going to have fewer people in the working age population. When we look at Japan, very similar issues there. Labor shortages are probably linked very much to the COVID-19 related disruptions. Again, when we look at many factories in Japan, they're very reliant on persons to work. But right now, we have these travel bans that are in Japan that are very strict, and also suppression of tourism. And so that's kind of blocking the free movement of labor. And so in that sense, that's probably why we're seeing a reflection, or at least these labor shortages reflected in Japan. But again, similar to the US, Japan does have an aging demographic. And so labor shortages are probably something that will linger even beyond the pandemic. So, Ataman, interestingly, climate change rose near to the top of the list for some CEOs. Why do you think this is the case?
Yeah, this is very interesting. So climate change is really seen as a long-term risk in the global landscape. And last year's survey showed that CEOs had a heightened awareness of this type of climate risk, especially in the aftermath of the pandemic. So I think the global nature of the pandemic really exposed the global interconnectedness of economies and brought forth the importance of risks that are faced globally. And so that resulted in also a heightened awareness for climate risk, but one that is seen as a long-term risk. So when you ask about the concerns over the next year, it only ranks 16th globally. So that's not very high, relatively speaking. In the US, it's tied for 19th place. In Europe, where there's a little bit more awareness, perhaps in the short term, it only ranked 13. And for China, it ranked last at 30th place. So the only place where it was in the top 5 risk was seen in Japan. So I thought China was very interesting, really standing apart from the rest of the pack, because China is still focused as an emerging economy on high growth rates. And so they put relatively less importance on climate risk. And perhaps Japan being an island nation, island economy, they're far more exposed to climate changes and changes in weather patterns that are occurring as a result of climate risks. I think think maybe they are more sensitive to that. But in response to this type of climate risk, companies have really been thinking deeply about the changes they might need to institute in terms of their long-term strategic planning, but in terms of risk management. And there's also been more reporting regarding the actions that companies are taking. So there's more awareness for the long-term costs coming from climate risks and its implications on the energy transition that's coming as a result of that, as a result of trying to reduce the carbon footprint around the world. And more companies are including climate risks in their reporting, and this has really jumped up in the UK, according to some of our previous research. And large institutional investors like BlackRock and State are also calling on companies to address these climate changes in their reporting. So this is an area that is really gaining, and we'll be hearing more about going forward. So coming back to shorter term concerns, recession risk fell in the rankings in terms of C-suite concerns. Dana, recession risk fell in the US, but it was still keeping some CEOs up at night. What do you think about that?
Well, it's not surprising that it fell in the U.S. Certainly, the U.S. has advanced in terms of its recovery. The U.S. is now in expansion. We have plenty of people working. The unemployment rate is getting very close to levels that we saw even pre-pandemic. So for the most part, even despite the fact that we do have the Omicron variant raging in the U.S., the economy is still on pretty good footing. However, there were very strong concerns about recession risks in China and also in Europe. So just starting off with China, just over 1 in 3 Chinese CEOs feared recession in China over the next 12 months. Why is that? Well, in China, there's still this pretty glacial recovery in consumer spending, and there's also pretty severe weakness in the housing market. And also, we know that the officials would like to return to the long softball economic policy that was put into place just before the pandemic. And so all these things suggest a potential for a substantial decline in real GDP growth over the next year. There are also new government policies, including the notion of shared prosperity, which may promote select industries while de-emphasizing others. And so that could potentially also stoke some recession concerns. Moving to Europe, a lot of the concerns are linked to supply chain disruptions, in particular disruptions in Germany around the build out of the auto sector. And again, that's very strongly linked to a global shortage of computer chips or semiconductors, as they're also known. And semiconductors are needed for manufacturing high-tech equipment, especially motor vehicles and gadgets. And in Germany, this ongoing semiconductor shortage is hamstringing the manufacturing industry, and especially autos, which represent almost 20% of German nominal GDP. Our own analysis suggests that a recession in Germany linked to blockages in manufacturing definitely would reverberate throughout Europe. Indeed, our own analysis estimates that for each 1 percentage point decline in German GDP growth over the course of a year cuts about 6 percentage point from overall Eurozone GDP. So both of these big regions, China and also Europe, are still very concerned in terms of the CEOs, very concerned about recession risk going forward. So Ataman, I have a question for you. Did you see anything that could have implications for capital investment trends?
Yeah, so our survey is really covering a very wide range of topics. And I saw 2 important trends that might impact these investment plans or investment strategies. One is in the area of digital transformation, still a high-ranking concern area for CEOs and C-suite, as well as business model innovations. So these trends mean that we will continue to see investment ongoing and accelerating in technologies that underlie digital transformation. but combined with organizational capital investments. So it's not just the hardware, but also software and human capital that's required to run the digital transformation and operate new ways of organizing businesses. So that's one area that will, I think, have implications for investment strategies. Another area is what we saw in terms of ESG, especially social priorities that are rising to the top for CEOs. Globally, CEOs are committing to advancing economic opportunity and equality as part of their ESG priorities. I think that goes hand in hand with the increased pressure that businesses are seeing from all stakeholders, not just shareholders, but a wider range of stakeholders, and they are responding to that. I think that focus on ESG priorities, and especially in the social area, are going to impact some strategies in terms of investment and where funds are available and how those funds are going to be allocated is going to have some implications.
Well, I just want to add a follow-on question. Usually businesses, we think of businesses as being solely focused on the shareholder. We asked CEOs and members of the C-suite about this. What was their answer in the survey?
Those C-suite executives respond by saying that they are responding to stakeholder expectations in terms of their role in society, and that's receiving a lot more attention than just their shareholders. So they rank shareholders as the third ranking important stakeholder after their customers and after their employees. So, of course, indirectly addressing the focus areas and interests of their customers and employees will help to create value for shareholders. I think there's a recognition of that. But I think in terms of the perspective, there's been a major shift towards a broader range of stakeholders.
Wow, really fascinating.
So, Dana, did you see any issues that the C-suite is not currently focused on, but might rise to the fore as an important business concern or risk for them? Is there anything that might blindside them?
Well, actually, yes, there is. It's interesting. We asked how many of them are ready for the next big thing, whatever the next big thing is. And only about half of CEOs said that they were ready. That means the other half aren't. And so just looking at CEOs globally, 49% said that they were prepared for the next pandemic. That's pretty good, especially given what we've experienced over the last couple of years. Also, close to 50% said that they were prepared for any financial instability. And then another 40% said that they could weather an economic downturn. But the numbers in terms of shares that were prepared for other types of events really get to be small. So, for example, in terms of an inflation shock, only 38% of companies, of CEOs globally, said that they were ready, similar to cybersecurity risks. In terms of a natural disaster, only about a third were prepared for that. Supply chain disruptions, again, only about a third. And then finally, when it came to climate change, and certainly all the transition costs associated with preparing and defending yourself, only about a quarter of CEOs said that they were ready. So there certainly are a number of factors that CEOs are thinking about, but are not necessarily ready to engage in. So that really actually provides an opportunity for many businesses to look at their preparedness, to make sure that they have contingency plans along every silo and aspect of their businesses. Again, incorporating the needs of their stakeholders, including their customers, their employees, and also the reactions of of their shareholders. So those are some of the things that we noticed businesses, again, were concerned about, but not necessarily ready for. So I'm going to give you the final question, Ataman. Were there any topics in the survey that we didn't ask explicitly about, but C-suite executives were still very highly concerned about those things?
Yeah, so this is kind of the flip side of the previous question. We asked in an open-ended question, what did we not ask about? What are you concerned about that wasn't in the survey? And what really bubbled to the foreground is that geopolitical risks and risks associated with wars was something that's on their mind. It's in the, maybe in the back of their minds as an area that will significantly affect their business landscape globally. So these might be sort of clashes in Asia Pacific around China, or Eastern Europe around the Ukraine or the Middle East. And all of these things have significant economic and business implications and risks. And this was an area that was important for them that we didn't explicitly ask about.
Well, Ataman, thank you again for such a great conversation. So, folks, this has been Indications from the Conference Board. If you enjoyed this podcast, you may listen to additional The Conference Board offerings by going to www.conference-board.org/podcast, or find us wherever you listen to podcasts. Thanks again for listening.
This has been Indications from the Conference Board.